Welcome back to the Deep Dive. It is February 2026, and today we are doing something a little different.
Yeah.
Usually when we pull up an earnings report, we're looking for, the basics. Did they beat the number? Did the stock go up?
Did the CEO say something weird?
Exactly.
What?
But today we are looking at Philip Morris International PMI and their Q4 and full year 2025 report. And the reason we're doing this isn't just for the finance nerds out there.
No, absolutely not.
It is because we are witnessing one of the biggest corporate experiments in history, real time. A company that is famous, maybe infamous is the better word, for selling cigarettes, claiming they're trying to stop selling cigarettes.
That has been the narrative for a while now, delivering a smoke-free future. It sounds like a marketing slogan.
It does.
But if you look at the documents from this earnings call, which just happened on February 6, 2026, it's becoming very clear that this isn't just a slogan anymore. It is a structural shift. The numbers in this report are, frankly, staggering.
Yeah, I was looking at the top line stats here. Total net revenues, over $40 billion for 2025. Massive company. But the number that made me stop and actually reread it was the smoke-free revenue,
It's hovering around $17 billion.
which is nearly 42% of their total revenue. I feel like for years we heard about this transition, but 42%, that's nearly half the company.
We're there.
We are approaching a point where the Marlboro maker doesn't make most of its money from Marlboros.
And here's where it gets fascinating from a business model perspective. It's not just revenue. Revenue is vanity. Profit is sanity, right?
Right.
If you look at the gross profit, smoke-free products are now contributing 43% of the total.
Okay, wait. Let's unpack that because that actually doesn't make intuitive sense to me. A cigarette is paper and dried leaves. It costs pennies to make. These new products, the heated tobacco devices, the intricate pouches, they require technology, manufacturing, chips. How are the alternative products actually more profitable than the cigarettes?
It is so counterintuitive. You'd think the high-tech gadget has lower margins, but you have to look at the tax line.
Wow.
In many markets, governments tax cigarettes incredibly heavily to discourage smoking, but they tax the reduced-risk products like heated tobacco at a much lower rate. So even if the product costs more to make, PMI keeps a much larger slice of the pie.
So the government is essentially subsidizing their pivot.
In a way, yes. Plus, they have immense pricing power. Their adjusted operating margin is back above 40%. CEO Jacek Olczak called this a structural movement. It validates the idea that doing good, in their terms, switching smokers away from combustion, is actually doing better business.
And it's not just happening in a test lab somewhere. They listed specific countries where they've already tipped the scales.
The majority smoke-free markets.
Right. 27 markets now generate more than 50% of their revenue from smoke-free products. We're talking major economies here. South Korea, Italy, Poland, Romania.
And the Europe region as a whole. In the last quarter of 2025, Europe surpassed that 50% mark.
Yes.
Think about that. In the home of the cafe culture and the smoking break, the majority of this tobacco giant's revenue is coming from things that don't burn. 3 out of their 4 regional segments are now technically majority smoke-free.
It really feels like we are watching the old Philip Morris slowly dissolve and this new nicotine technology company emerge from inside it like a butterfly or maybe a moth. But let's get into the how, because it's not just one product doing the heavy lifting anymore.
No, and that's a key takeaway from 2025. It's a multi-category strategy. I like to think of it as a 3-headed monster.
Okay.
You have IQOS, which is the heated tobacco. You have ZYN, the nicotine pouches. And then you have VEEV, which is the vaping side.
Let's start with the big one, IQOS. This is the heat not burn device. It looks like a pen. You stick a tobacco stick in it. It heats up.
It's still the core driver. Shipments grew 11% for the year, and what's interesting is that it actually accelerated in Q4 to 12% growth. Usually with a product that's been around for a decade, you expect growth to flatten out, the S-curve, right? But they're seeing strong double-digit growth in mature markets like Italy.
Why do you think that is? Is it just better marketing?
It's better technology. They've rolled out the IQOS Illumina. It uses induction heating. No blade to break, no cleaning required. It removes the friction from the user experience.
And they launched in Taiwan recently, right?
It did. And that's a great example of the pent-up demand. They launched in Taiwan in Q4, and in just a few weeks, they hit a 4% market share.
4% doesn't sound like a lot.
In the consumer goods world, grabbing 4% of a national market in a month is unheard of.
Really?
It usually takes years to get that kind of traction. It shows that smokers are actively looking for this exit ramp.
Okay, so that's the high-tech heater.
Mm.
But I think the product that everyone in the U.S. is probably most curious about, because we see it everywhere
Yeah.
on TikTok, in gas stations, is ZYN.
The global #1 brand. The growth here is, well, explosive is the only word for it.
The numbers on ZYN are wild. Shipments in the U.S. were up 37%. They shipped nearly 12 billion pouches. That's something like 800 million cans.
And here's the crazy part. It would have been higher. This is a crucial detail from the CFO, Emmanuel Babeau.
Oh, yeah.
They actually had a supply constraint in the first half of 2025. They literally couldn't make them fast enough to keep up with the demand.
I actually remember this. I went to a convenience store back in July looking for a specific flavor for a friend, and the shelf was just empty. The guy behind the counter looked at me like I was asking for plutonium.
That was the reality. And the CFO explained it using a distinction between shipments and offtake.
Break that down for us.
Okay, think of it like this. Shipments are the trucks leaving the PMI factory full of cans. Offtake is the cashier scanning the barcode when you buy it.
Got it.
For the first half of the year, the scanning was happening faster than the trucks could drive. The shelves were going bare.
So they were missing sales because the trucks weren't fast enough.
Exactly. They spent the back half of 2025 rebuilding that inventory. They estimate there's now a surplus of about 25 million cans sitting in the supply chain just to ensure they don't run out again.
They flood-proofed the market.
Effectively.
And they're doubling down on the branding. I saw the partnership announcement with Ferrari,
Right?
which I have to say feels a little ironic. Formula One banned tobacco advertising decades ago.
Yeah.
You don't see the Marlboro logo on the cars anymore, but now they're putting ZYN next to Ferrari.
It's a very strategic loophole. ZYN isn't tobacco, it's nicotine. And the message they are sending is crystal clear. Ferrari is premium, high-performance, high-tech, and fast.
Right.
By placing ZYN in that environment, they are telling the consumer, this isn't your grandfather's dip, this is a modern lifestyle product. It reinforces the premium equity, as they call it.
It's moving the product out of the smoking area and into the VIP lounge.
Precisely. And it's not just a U.S. story anymore. They highlighted ZYN's growth in Pakistan and Mexico. This is becoming a global phenomenon, not just a Nordic or American one.
Okay, so we've got IQOS heating up, ZYN exploding. But then there's the third head of the monster, which I feel like I haven't paid much attention to. VEEV, the vaping product.
It's the sleeper hit of 2025. Shipments doubled.
Doubled. I feel like the vape market is so saturated. You walk into a vape shop and there are 1,000 brands. How is a big corporate brand doubling its size?
Because the market is fragmented and chaotic. VEEV is coming in with the PMI infrastructure and safety standards behind it. It is now the fastest growing brand in the international closed pod segment.
So cartridge-based.
That's the cartridge-based systems, not the disposables.
Why does that matter?
Because it proves their strategy is working. They aren't betting on just one horse. They know that different smokers want different things. If a consumer wants the ritual of holding something that looks like a cigarette, here's IQS. If they want to be discreet in an office, here's ZYN. If they want flavor and vapor, here's VEV. They are covering every single exit ramp off of combustible cigarettes.
That's a smart way to put it, covering every exit ramp. But I want to zoom in on one specific market that came up in the report as a sort of crystal ball for the rest of the world. Japan.
Japan is the preview. It's the market that is furthest along in this transition. It's the time machine for the tobacco industry. And in December 2025, they hit a massive milestone.
No, was that?
The heat-not-burn category in Japan crossed 50% of the total industry volume.
Wait, pause. So in Japan, more people are now buying heated tobacco sticks than actual cigarettes?
Effectively, yes. The tipping point has officially been crossed. The cigarette is now the minority product.
That is. I mean, if you told a tobacco executive 20 years ago that this would happen, they would have laughed you out of the boardroom.
It sounds like science fiction. But, and there's always a but, in these earnings calls, Japan is also providing a preview of the challenges that come with success. 2026 is going to be a tough year there.
Why? If everyone is switching, isn't that good for business?
It's good for business, but it's bad for the government's tax revenue. See, governments love the tax revenue from cigarettes. It's reliable cash. When everyone switches to a lower tax product like heated tobacco, the government creates a budget hole. So Japan is introducing a multi-step excise tax increase in April and October of 2026.
closing the loophole the tax man always collects.
Exactly. They are equalizing the tax between cigarettes and heated tobacco. This means PMI has to raise prices. They've already applied for price increases starting in April.
It's coming.
The CFO was very transparent about this. He called 2026 an atypical year for Japan. They expect volume growth to slow down temporarily because of the price shock.
So that's the plot twist. You succeed in killing the cigarette, but then the government catches up to your new product and treats it just like the old one.
It raises a massive question for the long term. If the price incentive disappears, if IQOS costs exactly the same as a Marlboro do, people still switch for the health aspect alone. Or does the migration slow down?
That is the multi-billion-dollar question. I guess we'll find out in Japan first.
We will.
Let's bring it back home to the U.S. We talked about ZYN's explosive growth, but reading between the lines of the report, there was some serious frustration with the U.S. market, specifically around the FDA.
Frustration is putting it politely. The CFO referred to long overdue authorization. You can almost hear him grinding his teeth in the transcript.
This is about ZYN Ultra and the new IQOS launch, right?
Correct. Here's the situation. ZYN is dominating the U.S. market 61.5% volume share, but they have what they call portfolio gaps.
What does that mean, portfolio gaps?
It means they are missing products that competitors have, specifically higher nicotine strengths and certain flavors. In the U.S., competitors are selling stronger pouches.
Okay.
ZYN has a product called ZYN Ultra. It's a moist pouch, higher strength, adult-oriented flavors that is designed to fill that gap.
But they can't sell it.
No. It's sitting in a pile of paperwork at the FDA. And it's not just ZYN Ultra. They're ready to launch IQOS ILUMA in the U.S. The supply chain is ready. The marketing is drafted. The training is done. They are just waiting for the green light from the regulator.
It is ironic, isn't it? You have a company trying to push these alternatives, which the science suggests are better than smoking. And the regulatory body is the bottleneck.
And it's not just the FDA. The CFO also called out the New York proposal, a potential state excise tax on nicotine pouches. He called it counterproductive to health benefits.
Basically saying, if you tax the safer alternative so much that it costs as much as smoking, people will just keep smoking.
That is the argument.
Okay.
And it highlights the regulatory anxiety that hangs over this whole transition. The technology is moving faster than the regulations. The innovators are ready to run, but the bureaucrats are still reading the rulebook from 1990.
Speaking of the rulebook from 1990,
Yeah.
let's talk about the thing that pays for all of this innovation, the cash cow, the Marlboro Man.
Combustibles, cigarettes.
It feels weird to talk about them doing well, but according to this report, the cigarette business is shockingly resilient. I would have thought it would be falling off a cliff.
It is the paradox of PMI. To build a smoke-free future, they need the cash flow from cigarettes today. They're essentially using the dirty money to fund the clean tech. And the performance was robust. Cigarette volume only declined 1.5%.
Only 1.5%. I thought smoking was dying faster than that.
The market expected a 2% decline, so they beat expectations. People are quitting, but not as fast as Wall Street thought. And here is the kicker. Marlboro reached a historic high market share in Q4.
Wait, Marlboro's market share is growing.
In the international market, yes. As smaller brands die off, people are consolidating around the big trusted brand. And because they have such strong pricing power, they raised cigarette prices by 7.6% this year. They can offset the volume decline.
So let me get this straight. They sell fewer cigarettes, but they charge way more for them, so they end up making more money.
Exactly. It's the pricing power lever. They pull it every year, and that money goes straight into developing IQOS and ZYN.
Portfolio resilience, they call it.
It's the engine that funds the pivot. Without the profits from Marlboro, they couldn't afford the billions in R&D and marketing for the smoke-free portfolio. It's a necessary evil for their strategy.
It's a fascinating, if slightly morally complex, business strategy. Feed the cow so you can eventually replace the cow.
That's one way to put it.
So looking ahead, they gave guidance for 2026. What are they telling investors to expect? Are they nervous about the Japan taxes?
They are cautious but confident. Despite the tax headwinds in Japan and some big tax hikes coming in India, we're talking a 40% price increase there. And Mexico, they are projecting organic revenue growth of 5 to 7%, and earnings per share growth of roughly 11 to 13% in dollar terms.
That is double-digit earnings growth. For a company of this size, a legacy giant, that is impressive.
It is. And the cash flow is massive. They're targeting $13.5 billion in operating cash flow for 2026 alone.
$13.5 billion. What are they doing with all that cash? Buying another island.
Deleveraging, mostly. Remember, they spent a fortune buying Swedish Match, the company that created ZYN.
Right.
That put a lot of debt on their credit card. Now they are using that cigarette cash to pay off the debt. They want to bring their debt down to about 2 times leverage by the end of the year.
Which basically means they want to be debt-free enough to have flexibility if another opportunity comes up.
Exactly. And to keep paying dividends. They know their shareholders love those checks.
There was mention of AI in the report, too, which I feel like every earnings call has to have now. If you don't say AI, does your stock price even go up? But is it just buzzwords here, or are they actually doing something?
It seems substantive in this case. The CFO mentioned AI as a key driver for efficiency. They are aiming for $2 billion in cost savings, and they see AI as the engine to get there.
How so? Like robots making cigarettes?
More like supply chain optimization. Predicting exactly how many ZYN cans to send to that gas station you went to so the shelf isn't empty, but also so the warehouse isn't overflowing. Analyzing consumer data to see where the next trend is popping up. It's about making the organization leaner and faster.
So leaner, meaner, and more digital.
That's the goal.
So let's wrap this up. We started by saying this was a check-in on a massive pivot. If you had to grade their performance in 2025 based on this report, what is the verdict?
It has to be an A. They hit their 3-year targets in just 2 years. That is the headline. They are moving faster than they predicted. They have successfully diversified away from being just a tobacco company. They are now legitimately a nicotine technology company.
The resilience of the cigarette business provides the safety net, and the smoke-free business provides the growth.
It is a textbook execution of a corporate pivot. Think about how many companies fail when they try to change. Kodak, Blockbuster.
Right.
Most companies fail when they try to cannibalize their own core product. They hold on to the old thing too long. PMI is showing that it can be done, and it can be done profitably. They are killing their own golden goose, but they are raising a platinum one to replace it.
It really is a fascinating case study. But here's the thought I'm left with, and I want to leave our listeners with this. We see Japan crossing 50% smoke-free. We see Europe crossing 50% revenue smoke-free. It feels like the train has left the station. The consumer clearly wants this.
The demand is undeniable.
But the brakes are being pumped not by the consumer, but by the regulators and the tax authorities. If the FDA is holding the keys to the U.S. market for things like ZYN Ultra and IQOS, is the regulator actually the biggest bottleneck to the smoke-free future that the company and theoretically the public health officials claim to want?
That is the tension that defines 2026. If the products are stuck in approval hell, the smokers stick with cigarettes. It's that simple.
We will be watching to see if those gates open this year. Thanks for joining us on this deep dive into the future of nicotine. We'll catch you on the next one.